Remember an important development. LIC has reported a strong set of Q4 earnings with their value of new business up 46% and the total APE also reporting a positive growth. Now, my colleague Yash Jain caught up with Siddhartha Mohanty, who's the chairperson of LIC, to discuss about their Q3 earnings and also the performance, and began by asking about how FY25 will look like for the company after a strong performance in FY24. Listen in to this conversation.
If you see enter FY24, Q1 and Q2 was not that good for LIC, and we have now in Q3 we have started moving and we have shown good result, particularly in margin and VNB growth, all these things. Q3 some improvement is there, and that's why I told it is just beginning, and this Q3 will not continue to Q4. Q3 will continue further. So FY25 will be still better than FY24.
FY24.
So that was my intention.
FY25 will be better than FY24. If I could come back to the quarter, as far as your annualized premium equivalent or APE is concerned, that grew by about 7%. I want to understand about Q4. Q4, of course, we know last year there was a rush to buy savings policies. It's a higher base. Do you think you can still do positive APE over that strong base in Q4?
Yeah, absolutely. Because AP has shown some positive growth and it will further improve. Looking to our product line and all other things, AP positive growth will be there in Q4.
Okay. January has been strong. We saw the numbers day before. How does February look? How does March look? And then if you could help us with some number in terms of Q4 year on year, what kind of AP growth, what range of AP growth do you expect?
The AP growth, I cannot give specific number, but there will be growth. My sense will be close to double digit growth will be there.
The next thing that I want to understand from you is the non-par business. You had a target of 10% taking the non-par business out of the total APE. You've gone to 14% from just about 9.5%. The street was closely looking at this number. Now that you've reached 14%, do you think you'll only build more on this 14%? And if yes, what is the next target that you're looking at as far as the non-par book is concerned? Not 1 or 2 quarters later, but by the end of FY25.
If you see our commitment during listing, we gave non-par share, our objective is to take it to at least 15%. We are almost there already. And that I told you it may take 2 to 3 years time to reach that. But thankfully we have achieved that. And Q4, it will be much more than 15%. Non-par share to AP will be much more than 15%. Exact number I should not say, but already we are experiencing in current month and January also. So there will be good growth in non-par AP. And if you see total growth in non-par premium, volume wise if you see, not AP, volume wise non-par premium, last year 9 months and this year, more than 80% growth is there. As against 3,022 crore, we have done 5,400 something.
Correct.
So more than 80% growth in non-par year on year.
It's a very strong growth, and that leads me to my next question, which is directly related to non-par book, and that is your VNB margin. Another commitment target that you had set for yourself of about 20% VNB margin, faster than private players after listing. You've achieved that much faster than them. Now 20%, I want to understand 2 things from you. Does it sort of become a base that we have to grow 20 and now the struggle is going to be to build on that 20? Does that become the understanding? And if build on that 20, if the non-par book you're saying goes more than 15%, then by FY25, what is the margin range that we could see you having?
No, already you see we have experienced in last quarter 20%, but overall for period 16.6%, which is more than 200 basis points.
Correct.
14.6 now 16. And my sense is it will further stabilize, because looking to the product mix which we are now offering in the market, and those products are giving margin, this will be sustainable, this will be maintained, and some improvement will also I am expecting on this.
What is some improvements?
That exact figure should not say, but whatever already we have achieved, we will improve upon that.
Another thing that I want to understand, and this is on the matter of one company, ITC. You've had a significant holding, you paid down some holding, you still have about 15% stake in that company. Now, for the longest time, I've had conversations with various people, and LIC has been wanting or is desirous of unlocking some value out of ITC for itself. The reason why it couldn't do that, because of the fear that the ownership would change to BAT, the British American Tobacco. That fear seems to be fading, because BAT recently said yesterday that they are themselves looking to pay down stake in ITC. Does that sort of give you that liberty that now if BAT is also selling, LIC can look at unlocking some value for itself, because that fear is out of the window? Do you think so?
In ITC, you see, we are long-term investor. And from ITC we have got good value, high value. So we are now continuing with that.
Okay.
We have not taken any call whether to further divest or all those things.
Doesn't make sense for you right now.
And as things move, we will take advantage in the best interest of LIC.
Z Entertainment. The no identifiable promoter as far as the company is concerned. The person who's taking the call has lesser stake than you also. You have about 5% stake, he has about 3.5% stake. Still taking the call. The deal did not go through because of certain calls taken by this individual. Was negative for LIC as well as retail shareholders because of value destruction. It could have been a big positive if that deal would have gone through. Do you think what happened was wrong? And B, do you think in such situations, institutional investors, not just you, others also should come and sit together and understand the matter, take interest in the matter, and then take the final call? Because you are a big shareholder.
No, we are shareholder, we are actually closely watching what is the development, and we will take a call at appropriate time.
So Z matter is still under consideration for you, you are closely watching.
We have 4.5% stake. But nothing of that sort we have taken any decision, but we are just...
But you are monitoring, you have not let it go.
We are observing what is happening and how.
Okay. Now I want to talk to you about HDFC Bank. You recently got an approval to raise your stake, enabling approval to raise your stake till 9.99%. I want to understand from you, when did you apply for this particular approval? Since then, has your thinking changed? Back then, was it to raise it? Now it's not. Has that thinking changed? Or are you still interested whenever you get the opportunity in terms of price, value, to raise your stake?
And it is not question of only one bank. We approached RBI for, I think,
ICICI Bank?
3 banks, and we got approval at a different point of time.
Correct.
And these approvals are enabling provision.
True.
So that depending upon market situation, we should be able to raise our stake, which was not there earlier.
Correct.
So that we have taken and we will utilize at appropriate time.
So you've taken approval for 3 banks, which at least means that you're interested in these 3 banks. You see value.
Depending upon, yes, market situation.
Okay. So maybe if you have 1 year's time to raise that stake, if you get right price, if you get right value,
depends. Time will tell at this point.
But the intention is alive.
We have taken permission, that itself indicates.
Correct.
Yeah.
Correct.